Ever wonder what happens when a skyscraper becomes a financial sinkhole? Well, today, we're diving deep into the heart of Manhattan, into the complicated world of Donald Trump's real estate dealings.
That's right.
We're focusing on one building in particular, one with a storied past,
A New York City icon.
40 Wall Street. You probably know it as one of Trump's landmark properties.
Right.
But did you know this skyscraper could be a ticking time bomb?
It's true.
More than just another Trump Tower, 40 Wall Street has quite the backstory. So tell me, what's so special about this building?
Well, it was initially a symbol of audacious ambition, going all the way back to the Roaring Twenties. It was almost the world's tallest building, just barely surpassed by the Chrysler Building's iconic spire. Imagine that, aiming for the sky.
Almost the tallest building in the world? What could go wrong?
Ironically, 40 Wall Street opened its doors at the worst possible time, 1929, just as the Roaring Twenties came to a screeching halt with the stock market crash.
Oh, talk about bad timing, like planning a party on the Titanic.
Precisely.
But this is where Donald Trump enters the picture, right? Somewhere in that timeline, he puts his name on it.
Exactly. Fast forward to the 1980s, Trump manages to gain control of 40 Wall Street. But, and this is crucial, he acquired the leasehold, not the land itself.
Okay, hold on a sec. For those of us who aren't real estate moguls, break it down for us. What's a leasehold?
Think of it like renting an apartment. You can live there, you can even renovate it, but you don't own the building itself.
Right.
And you don't own the land it sits on.
Okay.
A leasehold is basically a really, really long-term rental agreement, and you're subject to the terms of that lease.
So Trump basically got a really fancy rental agreement for this massive skyscraper.
Exactly.
So what's the catch with that kind of deal? What could go wrong?
Well, the catch with leaseholds is they come with inherent risks, the most significant one being the potential for escalating ground rent.
Ground rent, as in you're paying rent on the ground, not even the building itself.
Exactly. You're making payments to the landowner, and if that ground rent skyrockets, it can have a big impact on your investment.
So even though it seems like a sweet deal up front,
Right.
there's a potential for things to go very wrong in a hurry.
Exactly. And as we'll see, in the case of 40 Wall Street, those risks are becoming much harder to ignore.
All right, so we've got this iconic skyscraper, history full of twists and turns, and a unique ownership structure that comes with its own challenges. Let's dive into where things stand with 40 Wall Street today and see just how precarious things have become. So we've established 40 Wall Street, grand history, lots of ups and downs. But today we're talking less about the drama and more about the cold, hard numbers, right?
Right.
Because frankly, this building isn't just struggling, it's practically hemorrhaging money.
Yeah, the financials are pretty startling.
Let's talk debt.
Okay.
Back in 2015, a $160 million loan was taken out on the building. Now, you might think, okay, big real estate, big loans, makes sense. But here's the kicker.
Yeah.
Today, there's still a whopping $118 million owed on that loan.
Wow.
While the building itself is currently only valued at $116 million.
That's right.
Meaning
Well, that means the owner is what we call underwater on the investment.
underwater. Okay, explain that one.
Basically, you owe more on something than it's worth.
It's like buying a really expensive car, crashing it, but still having to make those sky-high car payments even though it's now worth a fraction of what you paid.
A perfect analogy. And with 40 Wall Street, being underwater is a major red flag. Raises serious questions about the investment's future.
And it's not like things are looking up, right?
Yeah.
I mean, one of the biggest signs of a commercial building's health is its occupancy rate. Like, think of it like a store, empty shelves, not usually a good sign.
Right, you want to see those full shelves, lots of products moving. In a building, you want high occupancy, meaning more tenants, more rent coming in.
More money, more money.
Exactly.
Unfortunately, for 40 Wall Street, those occupancy rates have taken a nosedive. Back in 2015, the building was doing pretty well, relatively. It boasted a 94.5% occupancy rate. Fast forward to 2022, that number plummets to a worrying 73.9%.
Wow, so that's a lot of empty office space.
There's a lot of empty offices,
Yeah.
and that's going to directly impact the building's income, right?
Absolutely. Less tenants, less rent.
So in 2019, 40 Wall Street was bringing in about $41 million. By 2022, that number had dwindled to just $30 million.
Ouch.
Yeah, less income, massive debt, and a building that's worth less than what's owed on it. Not exactly a recipe for success.
Not at all. And it creates a vicious cycle. Low occupancy leads to less income, making it even harder to pay down that debt, which then further diminishes the building's value.
It's like a, what's the word, a financial avalanche just waiting to happen. But here's the thing. All of this is happening before we even factor in that ticking time bomb we mentioned earlier, the ground rent.
Right.
And as we'll see, that's where things could get really, really interesting. Okay, so we've talked about the debt. We've talked about the dwindling income. But now it's time to address, I guess you could say, the elephant in the room?
Right.
Or the ticking time bomb beneath this massive skyscraper? The ground rent.
Right. It's a big one.
This is where that leasehold situation gets really, really interesting, right?
This is where it really comes into play because, remember, Trump doesn't own the land 40 Wall Street sits on.
Right.
He's leasing it. And that lease comes with a ground rent that is set to increase rather dramatically in 2033.
Dramatic. Okay, so give me the numbers. How dramatic is dramatic?
Well, we're talking about a jump from $2.8 million annually to a jaw-dropping $16.3 million.
Okay, so that's an extra $13.5 million a year.
Every single year.
Just to essentially keep the lights on at 40 Wall Street.
Basically, yeah. And that's just to hold on to the land.
Right, right.
Doesn't even factor in all the other expenses.
So it's not even just about finding that extra, what was it, $13.5 million a year.
Right.
It's about, okay, if you're in negotiations with those landowners, you don't really have a lot of wiggle room.
You've got zero leverage at that point.
Yeah, you're kind of stuck, right?
Totally.
So if you were advising, let's just say hypothetically, if you were advising someone who is in this situation,
Okay.
what are their options?
Well, there's a couple things you could try. I mean, one option would be to try to renegotiate the lease terms before this massive increase kicks in, before 2033.
Okay.
But, and it's a big but, given the building's current financial struggles, I mean, it's already underwater.
Right. And not making very much money.
Exactly. And you're going to these landowners hat in hand saying, hey, can you give me a break?
It's like going to your landlord and trying to negotiate lower rent when you haven't paid your last 3 months.
Exactly. Not a strong negotiating tactic, you know?
Not a good look.
So that's going to be a tough one. Another option would be to try to sell the leasehold. But again, you're trying to find a buyer who's willing to take on this massive financial burden, knowing that this huge ground rent increase is looming on the horizon.
Yeah, good luck finding that buyer.
Exactly. It's a tough sell, no pun intended.
So it seems like 40 Wall Street has become more of a liability than a trophy property, wouldn't you say?
I think that's a fair assessment, yeah. It's a good reminder that even the most impressive real estate, even these iconic skyscrapers, can come with these hidden risks.
Absolutely. And, you know, this isn't just about Donald Trump, right? This is a valuable lesson for anybody interested in real estate investment in general.
100%. This is why you got to understand leaseholds, ground rents, the market, it can change on you quickly.
What seems like a safe bet, a sure thing, could actually become a major, major burden.
Exactly.
Well, this has been fascinating. I mean, it's a cautionary tale, for sure.
It is.
It reminds us that sometimes those grandest skyscrapers can have foundations built on some pretty shaky ground.
Very true.
So next time you're in New York City, look up, admire those buildings,
Right.
but remember the story of 40 Wall Street, right?
Right.
Sometimes you got to look past that glittering facade to see what's really going on.
Absolutely. There are always more stories beneath the surface.
This has been a fascinating deep dive into the, well, the precarious state of 40 Wall Street.
Until next time.